Well, Yolanda, perhaps I'm just starting with those retail sales figures out just a short while ago. Of course, the market had been looking for a figure of around 0.6% growth in retail sales in February. So a bit disappointing on the face of it, contraction of 1.5%. We saw a little bit of rand weakness coming through on the back of that.
Yes, Stephen, Nedbank had expected an increase of 0.7, so very disappointing, but it really just highlights that there is no demand out there. Consumers are still under severe pressure, and that maybe there is room for further rate cuts. And if one actually looks at those numbers, we look at the retail stocks. Woolies seems to be off a little bit lower. Shoprite looks like it was remaining steady. So a bit disappointing for the market, but consumers need to come back, and they're probably going to come back later in the year.
Of course, this is retail sales for February. We did have that interest rate cut in March, so the latest interest rate cut, another 50 basis points. So that might have boosted confidence as we went into March. And of course, we saw those car sales figures out last week that showed that car sales have been improving nicely. So do you think we might see those retail sales ticking up as we go into March?
We could see there. We do have a seasonal change, so we might see consumers coming back. We're probably going to see the benefit of the last interest rate coming through in the next couple of months. In terms of car sales, it's coming off a very, very low base. Banks have increased their lending, so we should see consumers coming back. And if our retailers have the good strategies, looking at different products, your cash retailers are going to benefit obviously in the next couple of months. We see your credit extension coming down for the last 4 months, which in real terms the last time that's happened was in the 60s. So retailers just need to be more smarter in terms of their product lines and focusing on your cash, your cash clients.
Just taking a look at the market direction, we had a pretty soggy day Monday and Tuesday. Markets bouncing back a little bit today, and of course we have those resources stocks up by over 2%, and that pushing the JSE quite a bit higher. We were chatting a little bit earlier though, Yolanda, and you said volumes have been pretty muted this week.
Yes, Stephen, we saw volumes fairly low. Markets are at high key technical levels, so investors fairly cautious. We, however, have seen some brokerage upgrades in terms of our commodities going forward. And then, of course, we saw Singapore revaluing its currency this morning, which is great for emerging markets. So that's why we're seeing a nice healthy bounce this morning, and obviously markets fairly quiet. Looking out for data this afternoon out of the States and results. JP Morgan is going to be announcing their results this afternoon. So really, from the results we'll get some direction.
Of course, we had results out from Alcoa on Monday, slightly disappointing, no great shakes there. Intel out yesterday with results, and the market seemed to like those results, pushing Intel shares 4% higher and maintaining the Dow above that 11,000 mark. So it really is all about earnings season at this stage, isn't it, Yolanda?
Yes, Stephen. What's going to be very important about earnings season, especially along the banks, we saw banks coming off last night, the regional banks in the States. What's going to be important about the big banks reporting is where are the earnings coming from? Is it from the corporate, the trading activity side, or is it going to be from the consumer-based products, your credit cards, your lending activities? The bad debt, are banks still seeing high debt write-offs? So that's going to be important. And also, just in terms of going forward, where are the banks going to? Are they going to be making profits? Are they going to see consumers, coming back to the party?
And of course, we're going to get a picture of the health of the US consumer as well this afternoon with their retail sales figures. Also coming out today, we've got business inventories, CPI out of the US, also the Fed's beige book. So we're going to get a little snapshot of the US economy this afternoon as well, aren't we?
Exactly, Stephen. The beige book will be quite important because that gives us a breakdown of where the economy is, and that will probably give us hints to whether the the Fed will raise interest rates, even though that's highly unlikely. In terms of your retail sales, we're expecting a moderate uptick in those numbers. Obviously, CPI. They're also expecting a slight increase there, but we're going to probably see CPI ex-auto numbers going to be slightly disappointing because the Cash for Clunkers program has ended, and we're going to see that sustainability of come off, and so very important in terms of the economic growth and where the global economy is really going.
Well, not much news out in South Africa today, apart from those retail sales. We did have a little snippet of news, could be interesting to South African investors, and that is about Tencent. And of course, that's the Chinese internet company that Naspers owns a stake in, buying a stake in a Russian company called Digital Sky Technologies. Have you looked at this? Do you think this is relevant for our investors?
I think so, Stephen. When you look at the Naspers share value, Tencent makes up about approximately 64% of the share price value. So very relevant for our investors. I think in terms of the move, it's purchase very good for the share price. It's definitely Naspers is able to tap into global emerging markets through its ownership of Tencent, and it's feeding their strategy, Tencent strategy, going into emerging markets, trying to get access into to the internet users. I think it's a very good strategy. We've seen them partnership up in 2007 when they bought their stake, the DST stake in Russia. So very positive for the share price. We're seeing the share price coming off today, probably on a bit of profit taking. The share price has run quite hard, and our one-year target is over 350 rand for the share. So very good for the strategy, and it will benefit them in the future.
Because as you said, the share price coming off, it's down about 1% at this stage, trading around 306 rand, but 350 rand a good target to have.